Hello, folks. Welcome to the Born Trader. I'm David Russell, Global Head of Market Strategy at TradeStation. The Born Trader is our new webinar series. It's something when we're going to focus on trades as they're unfolding. And it's inspired by some of the new commercials that you might have seen running for TradeStation. These speak to people who love trading and are really born for it. And that's what we focus on in this new series that we're going to be working on now. And our first one is about Intel, which reports earnings this evening. I'm just showing you some quick disclosures to begin. And now I will tell you what's happening with Intel. So this actually grabbed our attention. If you look last week over on our blog on Market Insights on TradeStation.com, you go down here, you can see an article, Options Alert, call buyers may be sticking with Intel. Now, at the time we wrote about this, they were doing a call roll. They were going from the March 55 calls, which they had entered profitable and had made money on, and then they basically moved up to the March 60 calls. So there's a situation where someone had purchased the calls, the stock ran higher, and they basically adjusted the position to a higher strike and recovered some of their capital at risk. And you can see that right here. And I'm just very quickly show you now those 60 calls from March. They purchased those at for $2.26. Let's see where they are now. I have Option Station Pro over here. Take a look at this over here on Option Station Pro. Those March 60 calls now. Take a look at them. Those March 60 calls are now going for $3. They're basically bid for $3.70. So they bought them for $2.26, and they're now up about $1.50 from there. So it just kind of shows some of the things you can see when you look at the options. They're flowing. People were definitely kind of honed in on this one. And I would just mention Intel reports earnings tonight. People looking for a potential move. This is out in March. It can go up here to the expiration of this week, which is expiring on the 23rd. And if we look at these, I was actually looking here at a potential spread. People say who might potentially be looking for some upside might look for something like this to consider something like if people might look for a spread that would involve potentially purchasing the 56 calls expiring this Friday and selling the 58s against it. So that would be a call spread, and the cost of that now, where'd it go? It's down here. The cost of that spread, 1 second here, would be around 55 cents. It's not showing here for some reason. Anyway, I keep going. It would be at 55 cents, which could potentially be a profit of about 250% if the stock goes to 58 by earnings. Now, why are we looking at that? Let's take a look over here on our platform. And there's a weekly chart of Intel. Now, you can see it's run quite a lot. But if you look here back in the middle of 2021, after it had this big gap down, it had some pretty significant resistance at 58. So people might look potentially for a move up to that level. Now, there's one of the things about options. When things are really running frenetically, options are a way to manage risk. Obviously, a stock like this that has run significantly, people purchasing the stock at all, for the all cost of that stock might think that's a high, amount to pay. So the options allow people to potentially manage risk, and that's one of the key things we like to look at. One of the things when options are so well suited. So why is Intel running? That's the main thing we're going to look at. And what I think is very interesting here with Intel, when we look at this stock, it's been running, different political events like back here, and we outline these in our article. But I think what's really interesting, we had, for example, the NVIDIA partnership. There was some stuff with the White House and things like that had already kind of happened. What is interesting now, though, when we look at Intel, is that we start getting into more fundamental stuff over here. And one of those things was the fact that they have the new manufacturing process called 18A. And what 18A is doing is this is improving their manufacturing for small kind of nano level manufacturing, which is something where they had lagged Advanced Micro Devices and Taiwan Semiconductor, and now they're starting to play some kind of degree of potential catch up on that. And that's one of the big things that's happening. You see on the chart here. So we actually did a trading view idea in it back here based on the pullback, came back again, and then this event here was it really launched the stock on this latest kind of move, and you can see it's continued higher since then. This article is somewhere over here, and it's continued higher since. So the 18A manufacturing process basically suggests that the company could improve its profitability, but it also shows that the foundry business, which had been considered kind of a laggard for a long time, now maybe is staging something of a turnaround, and it's a business that wasn't profitable, and if it can kind of come back, that would add a whole new layer potentially to things happening with Intel. That is one thing. It's this turnaround play, the comeback of foundry, the 18A manufacturing. That's one thing. Now, the other thing that's interesting right now with Intel is that people are focusing on agentic demand. So everyone knows, obviously AI and this whole idea of generative AI and GPUs. Well, in many ways, it's not about the GPUs anymore. And you can see this with things like the memory chips and Micron and SanDisk and those names. That is no longer about the GPUs and the really high-end processing. It's about some of the lower level functionality, and that's where CPUs come in. So in many ways, maybe the last 2 to 3 years was about this GPUs. Maybe this year is about the CPUs. And I think that's one of the things people are focusing on something right now, like Intel. So as you do agentic work, and that means different kinds of processing jobs, different kinds of logic, running schedulers and things like that, that is often done with CPUs. And this is more basic logic. Like if it's 2 o'clock, do this. If there's this amount of data, then do that. If this thing is here, then and then these are not really the kind of jobs you would give to a more expensive GPU. You'd use these for CPUs, more kind of standard traditional chips, and that is where Intel now people are really focusing on that demand. So apparently, the CPUs for their servers are mostly sold out for this year because of hyperscaler demand. And what's really interesting also is that they have essentially at this point these other products today could be focused on in the earnings call, things like Panther Lake and Xeon chips, which are part of that agentic AI push. So I think it's really interesting to realize here that we have seen the AI trade evolve. Obviously, it started with NVIDIA. It has involved other companies along the way. We've seen this amazing move in some of the memory chips. We've seen some of the hardware names, the companies that make some of the different pieces of hardware, like Applied Digital and these different names have at different parts of the cycle have been active. We saw the huge move in the memory chip makers, and now like Micron and SanDisk, and now we're seeing, in some ways, is a little bit of this opportunity, this situation happening with Intel and the CPU focus, but you also have the whole turnaround after years of lagging and underperforming. So this is also drawn in the last couple of days. There was an upgrade from Seaport, but what was really interesting was HSBC raised the stock from the price target from 26 to 50, and they raise it from reduced to hold. So they still put it as a holder swing. But the key thing is that this shows when analysts are still kind of keeping it a hold and stuff, and they're playing catch up with the price targets. It shows that Wall Street and investors are still certain extent behind the curve. They're playing catch up, and that's why the stock is sprinting. So when money is in the process of moving and reality is in the process of changing from Intel struggling to Intel coming back, that's where the move occurs. That's when the actual price action happens. And that's what makes today's earnings call so important. So I want to just kind of point that out. So I want to show a few other things really fast on this one. These webinars are going to really focus on really what the trade is, what's happening. Don't forget this afternoon. So very quickly over here, I have on this radar screen, I want to show you this. All right, wrong one. Let me start with this. All right, so basically on a year-to-date basis here, it's interesting to take a look at um, essentially we have a value play happening in some ways inside of tech. I wanted to show you on a year-to-date basis here. If you actually look, Intel is a number 3 member in the S&P 500 behind SanDisk, which of course is memory chip maker. So here we can see that Intel is the number 3 stock in the S&P 500 on a year-to-date basis. Now, also look here at this daily chart. This shows the options activity, and what you can really see in this is you can see that the options activity has been increasing as this goes higher. So remember, there's different ways to look for this on TradeStation. I'm not going to get into them today, but when you look for things that have increasing options activity, that can be one of the ways to find things that have a degree of interest. And you can see the average there has been trending higher. You can see some of these sessions are pretty big, going over 1 million contracts on certain days. That actually shows something. Now, I want to show you over here on this radar screen really quickly. I made this little valuations tab, and I think this is really interesting. The valuations tab here, these are showing the tech stocks, the technology sector in the S&P 500. And what's interesting, look on a year-to-date basis. Who are the leaders? Well, we still have SanDisk. Moderna is not on the list because it's not a tech stock. It was in the S&P, though. But here do we see Intel is the number 2 tech stock on a year-to-date basis. Look at the price to sales on some of these companies. SanDisk trades for 9 times, but Intel trades for 4 times sales. Its price to book value is only 2 times, which is really kind of interesting. Now take a look over here, and we now look at the biggest by market cap. Look at some of these companies. Apple trades at 49 times book. Microsoft 9 times book. They trade at like 11 times sales and things like that. So again, there's different ways to measure valuation. For some of these things, Intel has not been profitable in certain areas, so they might have an unusual price to earnings ratio. But here's one of the things to realize: if that foundry business becomes profitable again, then suddenly you have those earnings can have significant earnings leverage. So what happens is when you look at a company that's been struggling, very often looking at it based on price to sales can make more sense, because what happens is as the earnings come back, as the margins improve, the earnings can improve dramatically. And if you want to look for things that are undervalued, looking at price of sales and price of book will tell you that. So if Intel were to stop having as many troubles and start having more profitable operations, you're going to actually see the earnings potentially catch up more quickly. But the way to spot it early on is by looking at things like price to book and price to sales. And you can do that right here with TradeStation. Now, we've shared a lot of these indicators in our other webinar, Market Trends. If you want to look on our blog, you can go to the most recent market trends on there. You can get the zip file, and you can actually go in and see very similar workspaces to the ones I'm showing you right here. It's also interesting to look right here. For example, look at the companies. Look at the fact that on a year-to-date basis, Nvidia is negative, Apple is negative, Microsoft, Broadcom, Oracle, they're all negative. These are the biggest companies. Basically, if you look by market cap, the biggest companies in tech, all of them are negative. The five biggest are negative on a year-to-date basis. Then you have Micron and AMD. But it's just kind of interesting to realize that this market has been now seeing this rotation. It's not just to like small companies, it's kind of mid-level companies and smaller large cap companies. And that's what we're seeing as it moves down the S&P 500. But what's very interesting about this also is that we've really seen this shift, as we've said in other webinars, to companies that deliver hardware and hard actual physical products, not high multiple companies that are communications and software. That has just remained a heavy spot in the market with those incredibly high valuations. You can see that with things like Microsoft that trades for something like 11 times revenue. I mean, that's a lot for a company that's valued at that kind of high valuation. So what we've seen in the market has been this kind of shift down toward these other kind of companies. And I think that's what's interesting as well when we look and we see what's happening in things like precious metals and emerging markets. And I would almost kind of say that, as we look for these other things that are happening, it's possible that this same kind of shift is now happening into small caps and happening into banks, the smaller banks. And the reason I say that is, think about it. If you have a really also materials, the XLB, as we talked about on our Monday webinar, the thing is, as you basically shift from these really large companies with trillions of dollars in market cap, it doesn't take a lot of money for some of that money to leave the really big names and go to these smaller areas and actually deliver some performance. In a lot of ways, that's what's happening. It's simply a question of the actual kind of leverage of when the money moves from the really big stuff, even 2 or 3% of the capital coming out of the mega caps going into these smaller areas can actually deliver much more sort of upside. And it's important just to realize here that the rebalancing in these large, hundreds of billions of dollars, trillions of dollars of valuation, this actually seems to be what's somewhat happening. And then when you look beyond just these really big names and you look down the list at the big software names, a lot of these companies, Adobe, ServiceNow, Salesforce, these are still large companies and they've been lagging. And as money can leave those high valuation stocks, they're going to these lower valuation, faster moving sort of companies. And that's in many ways what Micron is. That's in many ways what SanDisk is. Western Digital, Seagate, they trade at much lower multiples. So I think it's just important to realize. And of course, don't forget that it is earnings season. So really quickly, don't forget that we also have over here, what's up coming up with earnings. We have this basically that is in our state of our market trends webinar. We've shared a workspace like this where you can see the big companies coming up. Some of these tools with TradeStation, you can easily kind of see the big companies when they're reporting. You can sort by the upcoming dates. And what do you see right here when we look out? Basically, we can see here Intel is tonight, and then we look at a little bit more. You can see the companies here with big options activity with this highlight. But then what do you see next week? Lam Research. That's a chip stock that's been outperforming. Meta next week, Microsoft. These are the big names. And next week, I think we have 4 of the trillion-dollar companies reporting along with Tesla, Apple. So you can check them all out. Don't forget, TradeStation allows you to easily prepare for earnings season and to plan for earnings season. You can look at things based on options activity. You can look at things based on sector. You can look at things based on performance. You can look at things based on when they report earnings. It's all possible and not that hard to do when you set up some of these workspaces. And we've talked about them in some of our other webinars, and we will be back to that in another time. But today we just want to kind of bring to people's attention what's been happening in Intel. So I hope everyone has a great day. I'll see you Monday for State of the Market, and have